All right. Good morning, everybody. Getting a little bit of a late start here, but here we go. We got 2 minutes until NFP comes out. Let's go over here and see what they got, what they're looking at. They're looking at 0.3% on the average hourly earnings. So I want to see a number come out to be roughly about the same of that. Or under would be good news. This is a number that they will be paying attention to, trust me. And naturally, the non-farm payroll is a number. Unemployment rate, unemployment change, that's for CAD, but the unemployment rate and the non-farm payrolls. 180K is expected, 236 was last month. Got a massive spike in jobs. 517,000 that 1 month, but ever since it's been going down and been going down pretty consistently. So we shall see. Bitcoin had a spike last night during the Asian session after the open. Right there is the open, and it just traded straight up, taking out that swing high right there. After it took out that swing high, it traded into daily resistance. Here's the number. We got Bitcoin pumping to the upside for a split second, trading right into the weekly open. USD JPY getting a pump. That means the dollar is pumping. So the numbers came in higher than expected. That's bullish for the dollar. It's bearish for Bitcoin. So Bitcoin looks like it's going to be a short at the weekly open. Unfortunately, I couldn't get live quick enough to tell you guys when to take the short. I shorted it up here yesterday while I was watching the pump. I was waiting for it to run the daily stop because I had shorted it yesterday too. We shorted it right here on this candle. Obviously, on this pump, I was stopped out. And then as it traded up into this resistance area here, I took another short, and I am still holding that short position. The reason why is, to be honest with you, I just think it's toppy, right? It's having a lot of difficulty getting above anything. But we shall see. It is trading in a wedge, so a wedging formation can mean a lot of things. Right now, I mean, because of this move to the upside and yesterday's close above the 21, it actually looks, more bullish than bearish. So we'll see what ends up happening and how people take this news. Let's go look through a couple of the other markets. Obviously, S&P 500 getting a slight push lower. USD JPY, yep. Jay Bradley, I hope you did close that short position before the news. Always wait for the news before you're taking your short trades. That's where you could potentially be looking for shorts on the JPY if you think this number is going to be faded. I mean, there's your S&P 500. Big strong move to the upside last week and then instant rejection. Like this whole entire week, other than today, you have been trading down. You have down closed every day this week and making lower lows with each daily push. So in fact, you have retraced the entire move up. That's not usually a bullish signal. usually that's a bearish signal. And since Bitcoin was trading up as risk was trading off, I just felt as if though, if risk is going to come off, then Bitcoin will too eventually. It may pump and try to stop out a lot of people, but ultimately it's going to go down as long as risk continues to go down. If risk changes its mind and gets a bullish pump, it doesn't need to go very far to stop out a lot of people, because with COT data, we know that there are more shorts stacked up in the marketplace, in the risk markets, than back in '08. And the reason for that is this near-term forward spread. All right, this chart right here shows you the near-term forward spread, the actual number, and then the moving average. The 90-day moving average is in pink. Basically, if you look at these big down spikes here, this was your '01 market crash. This is the zero line. See where it says zero? So this middle line here, basically anytime we've been under it, you have seen a decline in prices. So basically this thing calls recessions pretty damn good. There's your '01 crash. There's your '08 crash. There's your COVID crash. And this is where we currently are. So the near-term forward spread has called every single market crash. And currently we are well beyond any of those other. We're even lower than the '08. So this is literally, this and a few other data points literally is the reason COT data is so biased to the downside. This chart is also the reason why people are saying the Fed is going to have to pause and then start cutting interest rates. Now, there's a lot of people out there that think that cutting interest rates is going to be bullish for the markets. But let me explain. If they start cutting interest rates and we're not at 2% on the actual inflation number, if we're still above the 2% goal and the Fed starts cutting rates, it'll be because of a tragic scenario about to unfold. That, in my opinion, will not be bullish. Even though people want to see the rates cut because they think it's going to give the markets a pump, I just don't think it's going to. I think it's going to have the opposite effect on the markets. Because everybody knows, you know what I mean, that the market's pricing in the Fed's going to cut this year. So all these pumps are good opportunities for you to, if you have a lot of Bitcoin and you want to, make sure that you can make some profits, this is a good area to do so. Now, you didn't catch the ultimate high at 30,000, and I am by no means saying that it can't go higher. I'm just saying that there is a lot of risk out there right now, ladies and gentlemen. And Bitcoin is a it's a risk on asset. It is usually traded with risk. So anytime it does something inverse to risk, I usually look at the opposite side of the trade. So if, like, basically US 100, US 30, and S&P 500, all three of those bearish all week long, Bitcoin bullish. Why? Right? It's not because Bitcoin is, finally doing what it was built to do. It's because it's probably a move to be faded, more than likely. Last week on the S&P 500, if you look at the weekly, this was a strong bullish close. You tested well down into the lows and then had a very strong bullish close. You closed above resistance. This is your resistance point. Next resistance point. So you closed above it. And then this week, you took out the high of last week and the low of last week. That's a bearish engulfing candle. Now, typically, they don't mean a whole lot to me in a bullish market. And the market is bullish. Well, it's up. It's not really bullish. It's more sideways than up. But it's, it is above the yearly opening range. So it is higher. It is positive on the year. So we have to basically wait and see how we trade next week. And if I ain't mistaken, there's a lot of data coming up next week. We got CPI next week. Quit smoking, Heath. Yeah, I'm working on it. So with that number, I would probably be looking for shorting opportunities. Average hourly earnings went up by 0.2%, and it went up by 0.1% from last month. Average hourly earnings is up 0.5%. Let me pull that up. That's non-farm. Average hourly earnings measures the change in price business pay for labor, not including agriculture sector. They don't want this going up. They want it going down. They want the jobs. They want to see unemployment start happening. Since the labor market is remaining so low, I mean, it's got everybody confused. So if we get downside continuation, then we're obviously going to be looking to short the market. This is the yearly open, so this is your yearly range. There's going to be the yearly low is going to be right there. This was the yearly high. Nope, still is. So you did not take out the yearly high. But you are still trading up, near the highs of the year. You have a bearish engulfing monthly candle. And we are very, very early on into this month. So this literally could have just been a stop run on last month's low, and we could see prices rebound. That's not what is on, par for what data we have currently. The data that we have suggests we're going to see the market crash. So I leave it up to you to make your trading decisions on your bias. It's easier to take things day by day, in my opinion, right? If you want to get short or start building a short position, do it with very small positions, no leverage. You can do it with options. You can buy premium. As long as the VIX is climbing, premiums will be as well. So you need to start buying them early. You don't want to wait. There is a big down move on the VIX today. So the VIX is coming off pretty hard. That's because the S&P 500 is up pretty good on the day. So it did have an initial down spike, but now you're climbing back to the upside. You have already took out the high of day. And Bitcoin is still trading above its daily open, so could this be a buying opportunity on Bitcoin? It could. Let's put it on the bigger chart and let's see here what we got. So we have a daily support right there, which is simply going to be the daily open. And you have tested that. So if you were going to be a buyer, that's where you would have looked to been a buyer right there. Daily support. Yesterday's close. A lot of wicks up here. On the weekly, you tested almost weekly support. The 2021 low is what caught that wick. I mean, it caught it to perfection. That is something that I missed. I should have had that line on the chart, as that would have been an area to look for buying opportunities. You can see here on this day, you tagged that level to absolute perfection and immediately rolled over, or, turned around, started to go back to the upside. Had a lot of downside fake outs this week, but then it turned around and started to be bullish. So definitely difficult trading, but as long as you're watching your major levels, your higher time frame levels, you will be okay. I know I got a lot of lines up here, right? A lot of lines, but they're relevant. You can see how you pushed right up through yesterday's high, then hit daily resistance, and that's where you failed. So ultimately, I've already taken profits on the move. Last night, I took profits. I had a profit taking order set right above the Heath level there, and that order was triggered while I was asleep. So any move lower from here will just be more profits, but ultimately we have to see if it's going to be bought up. You're still green on the day. That is a nasty looking downside hourly candle, but you're still green on the day. That's important. You are into daily resistance. It is a Heath level as well. It is a demand zone, because anytime you trade above, this is considered a demand area. So could you buy the demand area and then simply put a stop loss below this wick? You could. That would give you a 2-to-1 target right back up to resistance if you do have a long bias. Would not be a 2-to-1, but a little bit better than 1.5 to 1. So 1.5 to 1. I wouldn't expect that to play out today. It could, ultimately, but I wouldn't expect it to. Because, like I said, the numbers that we got are bullish for the dollar. DXY not rejecting the weekly open. I'm not sure what you mean by that. DXY not rejecting the weekly open. No, it is not. Yes, well, technically, it's not done yet, right? It didn't reject. It did trade much higher than the weekly open. This is where I would be more interested, though. I wouldn't even really be too concerned with the weekly open. This is where I would assume the DXY to stop or have trouble moving past. All right, that's going to be weekly resistance, and it says monthly support, so it's old monthly support. This is the first time we broke down below monthly support last month, and this month, it's very early into the month, but you are still trading as an inside month. So as long as you're trading under weekly res or the monthly open, then it would appear as if you get downside continuation based on last month's candle, then you would be looking to be short the dollar. So that was a good area to look for shorts. It still is. Any pump back up into that region could ultimately give you opportunities. But you can't do that on the DXY. So let's go look at the USDJPY. You're bearish on the week. You got monthly resistance right there. It's been trading in a range. This looks like a bear flag to me. But ultimately, you broke out above monthly resistance last month. This month, still early in the month, traded higher. Now you're pushing lower. You're in a range. So this is going to be the range for the month. And you can see that you're almost down to the bottom side of that monthly range. There really is no level that I can see where it currently is other than yesterday's high. Because you're trading above it right now. So maybe if it starts to get rejected here, but like I said, that's all bullish stuff for the dollar. So which would play it back in line of looking for markets to roll over. The markets have had a pretty big down move this week. I would definitely want to see bullish continuation above 4,100, as that is this swing high. I don't want to see it just get up to 4,100 and reject. Just yesterday's high. Nothing on the weekly. Nothing on the 2-week. Nothing on the month. Right there would be a month heat level, so to speak. I mean, it looks bad. But you can get bearish engulfings in an uptrend and then be rebought. Right? As long as you got bullish trend to the upside, even if you do get a bearish engulfing, you can still see the next week engulf this candle, but to the upside. A lot of jagged sideways trading been happening intraday on these assets. So it has been making it difficult. This was a decent trend, but then it got reversed. So anytime that happens, I do get a little bit weary. But on the weekly, you're still bullish. You're still good. You're still above the 50. You're still above that 21. So naturally, I do expect a little bit of support to come in here. You can see right there is, I mean, I don't like using big candles like that to be demand, but it is an old resistance area. It held as resistance here. There's the breakout. Kind of consider last week a test of it. This week is definitely a test of it. That's where you turned around. So boom, boom, and then you turned around. But you're not uber bullish either. Like, you didn't get a massive bullish spike from there. So it looks iffy to me. Still looks like a selling opportunity. There is tech. Tech or the NASDAQ looked better than everything last week. You can see it's still trading far above its 21 exponential on the weekly time frame. Essentially, it traded down to old monthly resistance, or also you could look at this candle there and call that weekly support. You can see how basically this is where you're finding your trouble. If you fib this from there, the low to high, that range, I mean, you tested the 618 to perfection. You are getting a bounce. So it is still a little bit early to get uber bearish just yet. This market is obviously in a bullish push. Like, this is a straight up move in a sense. But you have been struggling up here, like all other markets. All other markets have done pretty much the same thing. They get into an area like this, they get a nice push above, then a rejection. Bitcoin was in a range for a little bit longer. It's still in that range. It is still in that range. Weekly resistance, also monthly resistance. That's like the main level that Bitcoin needs to get above, close above. And then obviously it's got to get above daily res as well to start pushing. Let's pull up Glassnode and see if we got anything happening here. Let's see if our whales are buying or if they're... Nope. They're still in a... So you got a little bit of a spike up occurring. So that's consistent with this bullish spike that we've seen. As long as it doesn't just get up to there, where you can see that line is like support and roll back over, then Bitcoin should stay okay. But you can go into the other addresses and see as well. Like here's your 1,000 Bitcoin addresses. It got a nice little pump as the move moved higher there. But as you can see, ultimately it started to roll over too. Those are your whales. The 100 Bitcoins per wallet got a nice pump to the upside and is still on an uptick. And then basically all of these are going to be going up, the rest of them. Your retail wallets always going up, never going down. Open interest had a slight tick up here. And then you can see on that move lower, you lost some. That would be short squeeze or, taking out your leverage longs. That will, bring your open interest down a little bit. Well, I mean, you can see that it looks like it is kind of trending down or wedging up. And that's what you got. Do not want to see it break down. But it does look toppy. Definitely range bound trading. Am I late today? No. We started right before the print, so we've been going about 30 minutes, 34 minutes. Yesterday's stream got hit with a copyright claim. I don't know why. Over the bridge is what they said. So I didn't play any song called Over the Bridge. The only thing that I can think was the music that was being played on the Federal Open Committee's on their YouTube channel. They had music going before before Powell started his speech. That's the music that if that's the music I'm being copyright claimed on, then whatever. I just made that video unlisted. That's typically what they want you to do. All the other music I play, I have rights to play, so they can kiss it. But you're not late. What is more bullish, Texas Roadhouse or your auto parts play? What is Texas Roadhouse's ticker symbol? Like I said, on O'Reilly, that's something it's more like a value play than a growth play. And typically in like iffy markets, value is definitely a good idea to own some value. I mean, you can see O'Reilly is trading at all-time highs. Obviously, buying the pullbacks is what I suggest everybody do. But I mean, if you look at this chart, it's insane. Insane. This chart just goes in one direction. always. But it didn't give me a deep enough correction to purchase. It's an expensive stock. It's $933 per share, right? So, I mean, you could have made a couple $100 or $100, a little over $100 if you would have bought the dip here. And you could see we were watching this area. It didn't give us a perfect entry, but on this day it kind of did. It must be a weekly or a daily level or something. Oh, it's a gap fill, is all it was. So you had a gap fill, explosive move to the upside, slight pullback, explosive move to the upside. So clearly people have been buying this thing. It's not a good trade to do right now. Like, you don't want to buy all-time highs. In the history of this stock, though, if you would have bought all-time highs, you'd be up. But, you set through a bit of pain for a while. They make money. They do miss on earnings. You can see there. There's two misses, miss and a miss and a miss and a miss. So I don't know why people are so heavily invested into this stock. But for it to continue to run straight to the upside is crazy. Roku pulling back off of its move. AMD. The market isn't open yet, so that's yesterday. Nvidia is pulling back. It looks like they bought the move to the 21 because you're pre-market, you're gapping up. You're going to be opening up in here. Well, I need the ticker for that steakhouse. Sloth bag. TXRH. Another play that just continues to go up. Yeah, I mean, you're at all-time highs. You just broke out above all-time highs. This morning, you're gapping down pretty big. A pre-market, this thing is gapping down into the 21. I'd say if we're going to get a big recession, if more banks start to fail and we do get that '08 style recession that, the near term forward spread is predicting, it's predicting a massive, massive recession. It's the lowest it's been since 1980s. And this is the Volcker period. So, I mean, it's predicting a massive, massive. It's lower than the '08 crisis. It's lower than the '01 crisis. But the '08 crisis wasn't as low as the '01. So maybe, how low it is irrelevant as far as calling how bad of a crisis it's going to be, or how bad of a bear market are we going to get. It doesn't even mean that we will get a bear market. Remember, I mean, investors ultimately decide where the market goes. Money flows, demand. This stock clearly has a lot of demand for it, like O'Reilly. So I'd put them both in the same like watch list and just wait for pullbacks. You have a very short, very small near-term pullback right now, but you're getting the pullback after making fresh all-time highs. So you might want to give it some room to breathe. On the weekly, this thing is just scorching the earth. But it can have pullbacks. So this actually started to pull back 2021 when everything else was in a massive bull market. And then, in 2022 was when we had a bear market the entire year, pretty much. That's when buyers started to come back. Halfway into the bear market, they decided to show back up. So this stock can definitely be affected in the bear market, and so can O'Reilly, obviously. I mean, there's your Wu flu there, and it got pounded just like everything else. '07, '08. I mean, you came off 48% in the '08 housing bubble. That's what I said. I would love to be a buyer if I could get like a 40% correction on it. That one was 28%. That was a 41% correction. Been a perfect place to be a buyer. 47. You can see basically like 23. So between 20 and 40% of a pullback, then I'll be a buyer of it. I can't buy anything that's in all-time high mode. Yes, it can continue to go up, but eventually it's going to run out of demand. I got Bitcoin on the other monitor. It's just basically bouncing around sideways. Still not doing anything. Ultimately, you got that on the news, and since you've not really done anything, you did push all the way back up to 29,126. So quite a little bit of volatility happening. But this down here is daily support. Right there. As long as you're not closing daily candles under 28,857, it looks good still, in my opinion. Even though I am short, it just, that position was just for a simple trade. It wasn't, I'm not shorting it. Like, I'm not getting short because I think Bitcoin's going to crash. That's just me playing a day trade. It was at resistance, so I sold it. That's simple. At support, you can be a buyer. It is trending up. As long as you're above the 21, the bulls have control. Barely, though. So they got control, but they're not able to make something like this. After this breakout happened, I would want to see bullish continuation, not an instant rejection. And then this day right here just kind of threw everybody off. Got uber bullish and then really bearish, but then closed up on the day. And the next day had a nice advance. Nice looking pullback until this day. Boom. So it's, you know, it is what it is. It's easy to trade as long as you can, be patient. It trades really good. That's why I like Bitcoin. That's pretty much the only reason I like it. It trades really good, really technically. You're in a 4-week range. Or longer than that if you count these weeks here. Two months. I wonder if this ends up being the monthly low though for May. You know the saying, sell in May, go away. But looking back in Bitcoin's history, it's like half and half. Like half of the Mays were bearish months and half of the Mays closed bullishly. So I mean there's not really anything else that can be said, right? Even if this May closes as a bearish month, it doesn't really matter because it's not, like I said, there's no edge on that saying. There might be in traditional markets, just not in Bitcoin. Bitcoin's a very young asset. It's only had 12 Mays. Right? But the numbers that we did get today were, bullish for the dollar, but you can take that with a grain of salt the way the dollar's been trading. It's been in a range for a while as well. Still is range bound. You're in the middle of that range. The fact that you have these big wicks off of the bodies, that means it doesn't really give you any, any decent spots to look. I would love to see it get downside continuation, as that would be bullish for risk. And we want risk to go up, because if risk goes up, Bitcoin goes up. Traditionally. That doesn't look bad. The one that looks bad and very, it's just is the Dow. But the Dow has a lot of the banks in it, so that's one thing that's beating the Dow up. But you're just right now you're trading at the yearly open, so this thing can't decide if it wants to be bullish or bearish. There's your yearly high, there's your yearly low. So you're just barely bullish on the year, just barely. Like you're trading at the open of the yearly candle. And we could see more of this. These things can trade in a range for the rest of the year, guys. The rest of the year. It's been a really good week for me on Bitcoin. Like, every trade I've taken on the asset has been a winning trade this week. Which is good. More than likely, the S&P 500 is going to have a down close week. Today is Friday. This is when you'll be closing the week. Even though today is up, I would watch, though, after taking out yesterday's high, it could roll back over. And is trading like it wants to do that. It's definitely stretching for it. So if it doesn't hit 4,100 and trades back down before the open, at the open, you're probably going to see that spike up above 4,100. And then that's when we'll get an idea of what's going to happen for the rest of the day. Are we going to see an up there, or are we likely going to see the day close down? If you get above that, reject, and then start making lower highs and lower lows intraday, then you're probably going to see it head back down towards the lows. If you get above this and continue to trade higher, that will be a good sign. You will find resistance at roughly there because of the 21 exponential, but if you get above yesterday's high and you continue to trade higher, you're probably likely going to close back above the daily 21. So, like, this is kind of when the moving averages will get you hurt when you're whipping back and forth like this. So it's better to focus on your objective levels rather than the trending averages. And right now, I mean, if this thing closes anywhere under 4130, that's going to look pretty nasty. Because you're still going to be a bearish engulfing. You've already taken out last week's low and high. So it's already happened. You're already an outside candle. And outside candles can be reversal candles. But you can get outside candles in an up market. Here's one. Here's a perfect example. All right, you go up, you take out this week's high. That would look bearish, right? You took out the high and you closed on the lows. That's a bearish engulfing in an uptrend. Bearish engulfing in an uptrend. And then that happens. So I'm not super bearish yet, because I know that you can get bearish engulfings in an uptrend, and then the very next week, this would be an area to look to be a buyer again. Next week, 40.45. You've got the 21 under you. That I would wait for the wick to take out this week's low. But if you get downside continuation, you do not buy it. What you want to see is a flash down below and then an instant rejection, like no more than a couple hours trading under last week's low, and then get back above this line. Then any retest of that line, I would look to be a buyer. And anticipation of this being another bullish engulfing candle. But if we get downside continuation next week, then it will look a lot more bearish. Or, range bound. Then I will be looking to basically sell any retest of 41. It's just a big range. Piano keys. That's what I call piano keys. And these are monthlies. So since your low's been put in, you've seen nice moves to the upside, a retracement, move to the upside, retracement, breakout, another push higher, retracement. So, like I said, the trend is still up. There's the monthly 21 as well. You got the weekly and the monthly 21 exponential moving average acting as support. The bi-weekly, weekly. The only one you're under currently is the daily. So today's high, because I'm about to end the stream, today's high is where I would be interested in watching on the SPX. When the market opens, if we take out this high and then start to reject it, then I'll probably look for a short entry. If we get above this high and continue to move up, it will be a no trade for me. All right, no trade. NASDAQ looks a lot different. NASDAQ looks like a short right now. NASDAQ is struggling with hourly resistance. But ultimately, it's the same, right? It looks almost identical as the SPY, except it's not a bearish engulfing weekly. But I mean, the moving average on this is way down here, so you could get more of a pullback. And this looks uber bullish. This looks more bullish than any other asset, any other of the big four: the S&P 500, the Dow, NASDAQ, and the RUT. The RUT looks terrible. It's bearish. Short any pop in the RUT. VIX is down 8%. And you're barely up, not even 1% on the S&P 500. I think the trade is the S&P 500. There's nothing on the Dow. I guess you could be a buyer at the yearly open if you want to try that trade. But once again, how are you going to risk that? What I would probably do is wait for today's close on the Dow, and then Monday, if you close above, look for a retest into the yearly opening and see if it holds then on Monday for the potential buy. Leave it alone until Monday. Bitcoin. What are we doing there? Like I said, I'm already short on Bitcoin. I shorted at resistance right there. So when Bitcoin spiked up into resistance, as it started to fall, I took the short entry, stop above the wick, and last night got triggered out of the position by profit taking. So I still have 30% of that short position open from there, with the stop move just under break even. So the stop is setting like roughly in there. So I'm not going to do anything. If you want to be a buyer on Bitcoin, any retest of 28.57, that's daily support. That's right there. Now, I don't know that you're going to get it. And also, you have to be very careful. Don't just buy the first tag of it. Naturally, you can get a wick under it. So if you just throw a limit buy down there, you can get stopped out before you actually see if it's actually going to be a buy. So what we want to see is we want to see hourly supports build in here. Somewhere close to this white line. Hourly bearish closes. Say you get a wick down and then you close above it. Well, then on the next hour, wait for that wick down to that bearish close. Then you can look to be a buyer there, because then you can use that wick as your risk. Then you will have a defined risk. Right now, there is no defined risk, but you are up on the day. Ethereum is up 2% on the day. Ethereum is rocking and rolling to the upside on the daily. Looks good. You're above all resistances. You're above the 21. If Ethereum can keep this up, looks good. Looks like it will be breaking out of a longer term range. Now, obviously, you have resistance here and a ETH level or a supply zone that has to get above 1941. Let's call it 1935 to 1941. Got to get above that. And then if you can get above that, then I would look for it to continue. Because, you're still in an uptrend. There's your trending indicator. There's your yearly open. So, yeah, that was a pretty decent pullback, but you're still in an uptrend. You have not broken the trend to the downside yet. Near term, you have broken. This right here broke the uptrend. All right. I don't care how you put your trend lines. That broke the uptrend. But once you broke down there, people been looking for shorts. That's just the way it works. So if you want to wait until you get a break back out, which you probably already have that. Yeah, you already have that. If you'd have been using this wick, you broke out. Use this wick, you broke out. Like, I don't care which wick you use, you've broken out. When you get in a situation like that, just switch to the line chart. Use the line chart. That's probably the move right there. So it looks okay. But once again, you're going to have sellers up in here. This is supply. So be careful buying it up here. If you're going to be a buyer, please wait for daily support tests. How easy is that? Daily support. Right there's daily support. Yesterday at 2 o'clock, you broke down. But notice how price trades around it. Remember what I said. Wait for support to be built. Intraday, hourly support is there. So on this wick or on this push, you could have been a buyer risking that low. If you'd have done that, boom, shakalaka to the upside. And that's based off of daily support. You're looking to be a buyer because it's into daily support. Even though you're closing hourlies under it, you're just under it. right? You're not trending lower. You're just under it. So then you watch the bearish hourly close, as that will be the area to be a buyer. But that's on Bitcoin, because Ethereum there's no trade on Ethereum except for shorts. And I don't know if I trust doing any shorts. If you stall out here, I guess you could look for short. If you can't close an hourly above that, maybe then you could look for shorts. But it's cruising. You're up 2% on it. Bitcoin's up. Barely up, but it's still up. So since this is daily support, until you get an hourly closure under that, you can consider daily support test. I think I would rather get it down here if possible. So I'll leave it up to you. CAD Swiss back above the 21 EMA. Yeah, I'd probably close that one out. Once it starts going sideways, like it becomes one of those, like, what do I do with this thing? Right? I mean, and it's got really, really big. This is where we took the initial short entry. So you're back above this swing high. At that point, I would probably just close the trade down. I mean, the initial trade was successful, right? And it would have been nice to take more profits down here, but we never know what's going to happen with price. That's what makes, trading so difficult, is because we don't know what's going to happen. That's why I trade the way I trade. I take my short trades or my long trades intraday. I take profits. Then no matter what, I already got paid on the trade, no matter what happens. And then just leave the position open and see what happens with the rest. So to me, I don't care if it comes back up and stops me out. I already made money on this trade. I would have made a lot more money had I, closed it down here, obviously. But it is what it is. There's no way I would have predicted it would have gotten such a massive bullish bounce like this. But usually on NFP days, you get CAD news as well. And you did. You got employment change and unemployment rate. It's not telling us what it is, but you did get CAD news. Also, Swiss franc looks like it's about to roll over. It's struggling at resistance. See that? It's a major monthly resistance. It's the highest monthly close since 2014. Right? 2014. That's a long time ago. Last time we got up here, rejection. Well, we're up there again. And the same thing is occurring. Rejection. You're tagging daily support. Obviously, it's still in an uptrend, but today, for some reason, you got a very momentous move lower. But just like the CAD Swiss trade, right? This thing could push down here and then go up again. We never know what's going to happen. We just watch the levels and we take the trades at those levels. Some trades will be successful, some will not. So since you have Swiss franc weakness today and CAD Canadian dollar or the Canadian loonie is up 0.5%. This is down 1%. That's why you have such a massive move on CAD Swiss today. That's why. Canadian dollar is strong. In fact, Canadian dollar is the strongest asset on the day. It's even stronger than the DXY. It's up 0.55%. And then your Swiss franc is the weakest on the day, down a whole percent. British pound is unchanged. Japanese yen is weak. This is the one that's kind of difficult right now. It looked like it was going to be back in the risk off as it started to move its way up. Got above the yearly opening, set a fresh yearly low, could not make a fresh yearly high, ended up rejecting. Now you're trading back down at the lows. You are getting a decent bullish pop from down here. You did fill this gap, but it's rejecting at the 21 exponential and whatever level that is, which doesn't appear to be any. Yeah. It's an old daily level or something. Well, anyways, yesterday ultimately is resistance now, right? That's where it rejected from. That's your supply candle. The last up close before the reversal tagged it perfectly, rejection. So, yeah. I don't want to see downside continuation on this. I want to ultimately see it go up, as that's how I am positioned on USDJPY. Still short this thing from up here, but it's been trading sideways now since the beginning of the year. This is very sideways. There's your yearly opening. I want it to go lower. It's not listening to what I want it to do. I thought it was going to go lower. I thought it was going to continue its trend with this being a bull trap, but now we're right back up there again. It's difficult to get a directional bias on this for right now. But this thing was trending for so long to the upside, it could be choppy for an entire year before ultimately dropping. And it's still bullish on the year. Last year it's bullish, this year it's bullish. Naturally, it doesn't have nowhere near the size. And we're 5 months into the year. It's a very small candle in relationship to last year's. But I loved it when it was lower. It could ultimately rotate back to the downside, but I don't know. It's getting to the point where I'm thinking about closing it down and putting that capital to use somewhere else, because it ties up margin to just set in a position that's bouncing sideways. And since I already took profits on it multiple times, this is a big move from here to here, and it doesn't really change much of the position. Bitcoin getting a pop. You're up to 1% on the day. Any retest of 29.67, you probably won't get it. But we'll see. Remember, you're up on the day, so be careful looking for shorts. This is the area to look. If you get back up into here, I don't know if I would short it again, because it is structured bullishly currently. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.